gotta get some messes out the way here. Trash can. Okay. Welcome to another installment of ENTP Live. So the way this typically works is that I do a produced video release on Sundays. Now that's going to be whatever my topic of the week is. So this week's topic was early retirement and how to really go about retiring young and that sort of deal. And what I do is later in the week, typically on Wednesdays, it's always on Wednesdays, I do a live video kind of to do a deeper dive into the conversation of the week. And that's what we're doing today, except today is Thursday and it's a little earlier than I normally do it. So I'm just trying a different day of the week, different time slot. Last week's live, I did a lot later and I noticed that there were far fewer people who were engaged in that. So I wanted to try a different day, different time. And plus I've been busy. I'm in the middle of a move. I'm moving from my apartment in Fort Lauderdale. Now I'm in an Airbnb and then eventually moving into another home when the construction is done there. So I'm in the middle of that. So it's been a little bit of a crazy week. Just got over our Medicare survey with CHAP. That was last week. So that kind of pushed everything that I had on my plate from last week to this week. Just a lot going on. So we've got a little bit of a change here. Now, where does that leave us? Well, really, it leaves us in a interesting place where we're here to talk about exactly why I believe early retirement is what everybody should be pushing for. What is my definition of retirement? How do I view myself in the broader scheme of work and life balance, and really to try to focus on you guys today, where we can talk about how you should be going about designing your retirement plan once we get through that. So just to let you know, at this point in my life, I can officially say that I've reached my initial retirement numbers, and really that was a few years ago. So what you need to get through your mind is that retirement is really being able to sustain your person, your family on some sort of income that is not derived from directly working. Okay. This number can change drastically depending on where you are in the world. And it's something that you should be really thinking about when it's time to, hold on, let me see. Okay. The chat is quiet. Hey guys, because I'm actually streaming directly from YouTube this time instead of StreamYard. So if possible, can you just comment if you're here, hello, something along those lines, just so I know if this chat is working properly. Hey, okay, perfect, thank you. So the chat is working, and welcome. And don't forget to like this so that we could get more people engaged in this conversation. Brown sugar, baby. How are you? Okay, awesome. So okay, this is working properly. And if you could see, my camera is different and I'm just set up completely different. My USB capture card is kind of displaying a little funky. So I need to figure that one out. So Quentin, what's going on? So when it comes to retirement, you really have to think about how much is it that you need to maintain your lifestyle or the lifestyle that you desire to live, right? And how are you going to do that with passive forms of income? So many people are dependent on pensions, on maybe distributions from their 401k. Some people are dependent on Social Security and just Social Security alone as their retirement plan. And, all of those things, pensions can go bankrupt, can kind of fall out of favor in some kind. So I don't necessarily consider that quite guaranteed. Actually, nothing is guaranteed, but Social Security pays too little for it to be really viable. You could live off your Social Security income in another country, for instance, in South America. Most people would do fairly well on just SSI alone. But I really like to think of it as, generating passive income from real investments in real activity that is truly passive. Okay. So my initial thinking when I was thinking about my retirement number was just to achieve $10,000 a month passively. Okay. And I thought, hey, I could achieve that through some real estate investments so that I'm generating rental income and business venture. And, that's long been past. So my thinking was, hey, $10,000 a month in the USA that could afford my rent or my mortgage. It would afford me to be able to provide for myself, everything that I need, maintain a certain lifestyle that I like. And that was also from the perspective of being in New York City. So after that goal was hit, the I guess the the goals got just a little inched up as far as what I really wanted for myself, which was a global lifestyle, to be able to pick up, live anywhere in the world at any given time, continuously invest in new companies, fund new entrepreneurs, um, pay for the aircraft of my dreams, and really just live ultimately life on my terms. Absolutely, right? Without ever having to think about money again. And I bumped that number up to now $3 million a year of passive income. And I'm going to just achieve that through buying and flipping businesses and then eventually stacking more of my profits into real estate so that I end up with at least a $100 million real estate portfolio that's spinning off at least 3% a year in cash flow, right? So and that's the goal. I may get there with $50 million of real estate, depending on what sort of real estate I invest in and what sort of risk is in that real estate. Blah 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 blah. But that those are my numbers, and I think I I start there because I feel like most people who are sitting there thinking, geez, I hate my job and I wish I could just like, I wish I had, infinite amount of money, or even if I just had $5,000 a month to replace my $60,000 a year income, I would just stop what I'm doing right now. And I think, the closer you are to coming up with that number, the closer you are to actually planning something that's going to fit. If you look at my plan, it's $3 million from passive income from real estate. And for me to get that, I'm going to need to average about 7 or 8% a year on rental income. And, with mortgages between 4 and 5%, if I mean, if I'm averaging 7 to 8% on the asset itself, and my obligations are about 5% a month or 5% out of the year, then my spread is going to be 3%, right? So if that real estate asset is generating $8 million, $9 million a year in rental incomes, and my obligations are only $5 to $6 million a year between debt and management is concerned, I'm essentially net the 3%, and that's totally doable. I have some properties that I'm netting 5, 6%, 7%, depending on the capitalization rate of that particular asset. So when I look at the bigger picture, $100 million, conservatively speaking, 3% would produce the yield that I want. I could also do the same in home care business by just scaling up by a factor of 3, and that would kind of get that company to that point. So I have some options to achieve that, and it's really about just executing on my game plan to get there. But for you, you need to revert back and think to yourself and say, hey, how much am I going to need to live the life that I want to live for myself? Whether it's a middle class lifestyle, whether it's internationally, whether it's a wealthy person's lifestyle, really calculate how much it's going to be. Start with your biggest living expenses, right? Your housing expense. What do you want to budget for housing? Do you want to be paying $500 a month for housing? Do you want to pay $10,000 a month for housing? $20,000 a month for housing? What is your housing figure? Where is that property going to be located? Why that area? And, come up with that first number. So if you said, hey, I want to retire in Nice, France, and I really like the Mediterranean coast. I like France. Whatever the case may be, I want to retire in Nice, and it's just you. Maybe it's you and a partner, um, and you feel that you need a two-bedroom apartment. How much is a two-bedroom apartment that is up to your standard renting for in Nice? Okay, and put that number down. Let's say it's $2,500, right? Okay, so $2,500 living expense. What about food and entertainment, etc.? How much do I want to earmark for that per month? I don't know, maybe another 2,500. What about annual travel? What am I going to try to do in that regards? And then you keep working on it that way until you achieve, this number of how much it's going to cost me to sustain myself living the life that I want to live for myself. Once you have that number, let's call it $10,000 since I threw that number out before, you can then go back and start building your passive income machine that's going to net you $10,000,000, not $10,000,000, $10,000 a month. Okay. So that's really all it boils down to. And you need to look at what your skill sets are, how you can monetize yourself, what things actually do truly produce passive income, and how you're going to get there. Whether it's building a business, buying a bunch of assets, those are really your pathways, right? You're either going to have assets that are whipping off money for you, whether it's cash, cash investments in stocks, cash investments in debt, real estate that's spitting off monthly rental income, or you're going to have, maybe you're just invested in a private company that's paying you a percentage of annual profits, or you've built a business that runs independent of you, right? Those are going to be your two pathways to achieving passive income. That's really the only ways that I know of. The government stuff I don't count on, because the government could go bankrupt at any time, or the currency could get blown to bits and then you're screwed, right? So I would always look at, where am I parking my money and how is that asset producing for me? All right. But once you have that number, and that's all you need, you can back up into it. If you need help trying to figure out what the cost of living is going to be like, especially if you decide to leave the US, I think once you decide to leave the US and most of like Western Europe, your options for early retirement kind of expand and expand quickly, mainly because the number starts coming down, right? If you're like, man, $10,000 a month passively seems out of reach for me, or $3 million a year passively is out of touch for me. That's not going to do it. Like, I need something where $3,000 cuts it. $3,000 you could achieve in, like I said, retirement in 75% of the world easily. You could retire in Italy on $3,000 a month, even to the point that it will be approved by the Italian government, and you given residency on just $3,000 a month of proven passive income. That's enough, and they know it's enough for you to survive and maintain yourself in Italy without being a social burden. So the number gets really low when you broaden the horizon and broaden where you're going to be. But if you want to kind of calculate and just look at different cities throughout the world, what the cost of living will be, one of the best, calculators that I've seen out there, it's not very sexy as far as the UI is concerned, but the information is pretty legit, is numbeo.com, right? I'm going to put that just down here, numbeo.com, right? Numbeo allows you to put in the city, and it gives you a breakdown of cost of living, right? And how recently it was updated and that sort of thing. Another website is Nomad List, right? But this is more for the digital nomad, the younger kind of traveling entrepreneur, where you could go and how you could live. And it gives you, if you look at it, it'll give you cost of living in different scenarios, as an expat, as a nomad, as a backpacker, as a local. And you can decide, well, if I was living here, how much would life cost me? Once you see that number and you say, wow, all right, Rio de Janeiro, $1,800 a month for a family of four is good life. Same thing in Medellin, Colombia. You take it over to Tokyo, that number goes to like 6,000. whatever it is, you set that number, and then you start to back your plan and design your plan into that. If that number is 1,800 and you already have one Airbnb running, right, in your basement or in your accessory apartment, and you say, hey, that Airbnb does me an extra $800 a month in cash flow. If I had two more of those, I'd be at 2,400. Boom, your retirement number is hit. Granted, you're going to be completely exposed to just tourism income and Airbnb being a functional platform. But right there, in with very little investment, very little strategic thinking, you can hit a number that gets you to that retirement point. And all retirement is not that you're just going to sit around on a beach all day. It's really eliminating your direct necessity on the job. You could still work, you could still have gainful employment, you could probably work on things that you actually care about rather than what's paying the bills, right? Even if you saw a job opportunity that was a lot more appealing to you, that made you say, hey, if I could do that job, I'd feel fulfilled as a person, but I can't take a $40,000 a year pay cut, right? How am I going to maintain my kids, my life, blah, blah. That's why you need to plan for retirement and plan to replace your income with passive forms of income. Um, Now, it may seem quite simple as I'm putting it, and I think it might be that way for me because of the way I think as an ENTP personality type. But it's really that simple, where you first have to set your target. How much do I need to make and why? Where are you going to be living? Get all the details: housing, food expenses, entertainment, your travel budget, your healthcare budget, um, education for children, your utility cost, internet, discretionary spending, all those things. Just itemize them in a spreadsheet. And then cross that against the different cities that you may want to live in, right? American cities, international cities, and say, well, how much I'm going to need in these particular towns. That's going to give you a grid of options, right? You can have your total for New York City, your total for LA, your total for Miami, your total for Paris, your total for Rio de Janeiro, your total for, insert whatever city you want. And you'll have all the details, and you could really sit there and look at it and say, well, what's the most attainable for me as my first goal, right? How do I get to the cheapest one first? Doesn't mean that you stop working on accumulating assets. You get to the cheapest one first. You achieve your first level of retirement. Then you start to adjust up. At least that way, you're always working on what's good for you, what your plan is, rather than working on trying to get by, right? And that's really what I'm trying to stress here. See, here on ENTP Life, we mostly talk about real estate investing and my business ventures. But ultimately, I'm trying to encourage people to look at what I'm doing in my entrepreneurial life to produce money for me, and for you to kind of steal and replicate those ideas so that you can produce more income for yourself, so that you're actually out there living your dream life, whatever that may be. If you want to be, living with chimpanzees, hey, at least do that, right? Put yourself in a position to do that. You want to fly an aircraft throughout the world and travel instead of road tripping, you're air tripping, then you need to design how you're going to do that, how you're going to afford it, so that you're getting the most out of this thing that we call life. If this is the sort of content that interests you and you want more of kind of this sort of guidance, more of, dreaming out loud, then this is the channel for you. Make sure you like, you subscribe, you share it with your friends, anybody, your partners. I get a lot of subscribers who tell me, hey, my partner came across your site and shared it with me because I have these same goals and dreams, and I never had someone to guide me through what I wanted to do, and here you are. So really, this is the community that I'm trying to build. It's people who are willing to dream out loud, people who are looking to make more money, not because they're greedy or anything like that, because that's not even me. I want to make more money so that I can do more of the things that I want. I feel like money is an enabler. money allows you to buy people's time, buy people's effort, buy tools to do more of the things that are interesting to you. Okay. And that's what this channel is all about. So at this point, I'm going to kind of turn it over for questions, um, because I have my partner calling me, and I guess, you know, I'm on the clock. So Clean Earth Now says, and this is why I like StreamYard. Maybe next time I'll just stream from StreamYard, because I could pull the question up. Clean Earth Now says, Carl, hello and congrats. My Florida property gets $1,200 a month in rent, but mortgage payment of $300. I never intend to live there. Should I sell it under pressure from investors? What's your advice? Thanks. I hope you're still here. Clean Earth, you are still here. I think you're still here because I see a thumbs up. Okay. I think I need a little more details. Let me see the next question. Value packed as always, Carl. Currently touring some properties in Istanbul. Istanbul is cool. Yeah, Istanbul is cool. I like it there. Heading to Armenia and Ukraine in May, and was wondering if you were familiar with those markets. Not Ukraine or Armenia, or not even Istanbul. I was in Istanbul as a tourist. But I think a lot of the rules apply there. I personally am a big advocate for earning, right now at least, earning in, stable valued currency than local international currency. So I'd rather earn in like dollars and euros than I would in, I don't know, lira or I don't know, yen or something along those lines, right? Or reais or something. I'd rather earn in dollars because I feel like that's like the repository currency, or in pounds, for instance. I'd rather earn because the euro, pound, and dollar typically hold their value pretty well internationally. So if I'm drawing investment money, I'd like to draw it from those markets more so than drawing like pesos out of Mexico or something like that, where the currency will really rock you and change your whole. And I like more stable currencies. So with your property, Clean Earth Now, you said your property gets $1,200 a month and your mortgage is $300. So let's just say you're grossing $900 a month on that. And that's your mortgage payment, includes your taxes and insurance and everything for $300. Just a question. So the other additional questions I have for you is like, all right, so you're grossing 900, right? What are your maintenance costs on that property? What is your true net income on that property? How much did you pay for that property? And what is the current market value of that property? I typically don't believe in selling real estate. I like to hold mine, but you may find that there's better, like if you were to take that same, let's just say you walked away with $300,000 net, you might be able to take that same money, turn it over into other property or other assets, and instead of cash flowing the 900, you're cash flowing 4,500 a month or whatever, right? So to me, it's like, what would be the benefit of you selling versus making the $900 spread? And we would have to look at that and explore that. Suma Nulu says, I worry about being too far from family and they probably won't come out to visit me. Any thoughts on this? Well, if you're highly attached, well, how frequently do you, I'm answering questions with questions, but how frequently do you visit your family, and how frequently do they visit you now where you are? And, maybe they need to travel more, right? Maybe if you moved away into a lower cost situation, you could pay to fly them to visit you more frequently, or you could fly yourself back just to visit them. A lot of people get attached to family I would say most people, I think I saw a study that most people don't move more than 50 miles from where they were born, which to me is insanity. Um, so I think a lot of people may find themselves in that situation, but I think there's so much to gain from moving away from the nest that you were born in. Um, it forces you to learn different things, learn other customs. It forces other people around you to learn how to deal with you. If your family doesn't want to visit you, think about that. If your family doesn't want to visit you because you're too far away, then maybe you're staying too close to people who really don't value you. Like, if they really want to see you, they should travel, and if you really want to see them, you should travel back. And and budget for that sort of trade. You can't. You ultimately you have to figure out what's more important to you, being right there up on your family, or kind of seeing more of the world. If you value seeing more of the world, then you should. JM, hi, Mr. ENTP Life. I have about $10,000 available. What do you recommend to invest to make a quick profit? I can't recommend you invest in anything to make a quick profit. Because anything that's going to be promised as a quick profit on 10K is either going to be illegal or a scam. Like, what would you consider a good rate of return on an investment? Like, what percentage would you want to make on that 10K, and in how much time? And maybe I could give you some guidance. But 10K and a quick profit, to me, it sounds like you might have to sell drugs or something. Clean Earth now. My Florida property has appreciated in value from 50K to 200K in 8 years. But ultimately, I want to exit. Okay. Tax plus insurance equals 200. So you're cash flowing currently $700 a month. And that's an easy 700, right? But that $700 is not changing your life at all. And you have the potential to cash out $150,000. What would you do with the 150K? Right? In 8 years, you're talking about you've just quadrupled your money. So you got a 4x return on your cash in 8 years, which is phenomenal. Right? You're only squeezing out $700 a month, which I'm sure just gets spent on day-to-day living, right? So that 150K buys you what, 20 years of that same income. So I would look at, more importantly, $150,000. What am I going to do with it? And how would I invest that 150K to spin off more than $700 a month, right? Maybe I would look at using that 150K to produce $2,100 or $2,200 a month in income, right? Park it into another asset class that you're able to extract more value out of. That's kind of how I would look at it, and take advantage of interest rates being low. Take advantage of this seller's market that we're in, and cash out your 8x. That's kind of how I would approach it. Quentin, this may be too personal, but I came across an interview you did where you said your home healthcare business makes $12 million a year. How is that not already earning you $3 million a year passively? Okay, so in 2019, we were earning $12 million a year, right? That's revenue. So the spread in New York is about 13%, right? I hold 20% of that company. So even on the 13% on the 12 million, we net a little bit we net on the 12 million at that time. It's less now, unfortunately. We net about $1 million. So I'd be short there. If it was like a private pay scenario, maybe I would already be there, but it's Medicaid, so the spreads are small. What do you think about home exchange? Is this an effective way to be in other places? I guess so. I don't know how big the home exchange market is. Um, you're still going to have to maintain some bills of some kind. Great advice. Chris Evans, Michelle. Hey, Carl. Hope you are having a good day. What are your thoughts on buying property in DR? It seems like investors are pouring money into the island. It doesn't seem that way to me. Um, I th- I was just in DR, and my biggest gripes with DR is that the infrastructure is still too far behind. You know, um, I like the people. It's the same landmass as my parents' native country, but I just see there's too much infrastructure gap. Like it's either you're in a resort town, Punta Cana, Puerto Plata, La Romana. La Romana is not so much a resort town; it's getting there. You're in Santo Domingo, or you're in Santiago, and there's just too many infrastructure issues. Not enough money being generated per capita. I just too much dependency on importing goods, even food sources. There's no like national vehicle. There's no national, fossil fuel production. I just I think people like the Dominican Republic because it's cheap compared to the U.S. But I wouldn't pour money in over there. It's not my. Mm-mm. I look at like if I look at some of Spain's colonies, you look at the Dominican Republic, you look at, I don't know, it's probably the least performing of the Spanish colonies, right? As a country. So I would rather be in Colombia personally. Um, Better economy, larger economy, better infrastructure, less poverty. That I like the Dominican Republic. You know, when I first traveled over there, I thought about, I should buy a property here, but I wouldn't spend the money on a property down there. 'Cause I'd rather, if I was going to spend the money on that property, I'd get it in a more robust, stable market. Invest Global, agree with you with what you're saying, from earning in stable currencies and spending in emerging market currency. Exactly. I've been in Istanbul for a few months now, and the lira has dropped 15%. Yeah, Brazil, the real has dropped like 40%, from four reais to $1 to 5.6. So that's why I'm buying land there right now. Um, to me, it's crazy. Imagine I had my money parked up in Brazilian reais or a bunch of Brazilian assets, and now my assets are devalued by 40% in 1 year's time because of COVID, right? And so many things, so many world commodities trade on the dollar. Fossil fuels, a lot, pork bellies, all kinds of things are trade. Grains are exchanged on a dollar basis, so, or measured in dollar basis. So what happens? Brazil is lucky and fortunate in that they produce a lot of things locally, so they can kind of hedge against that, devaluation pressure. They produce a ton of ethanol for their automobiles. They're not dependent on gasoline, so that's pretty good for them. But when you see things like 15%, and 40%, I'd rather try to have my money in a few different economies, whether, like I said, and the better, more stable currencies, the pound, the euro, the dollar, maybe the yen, because Japan's economy is pretty good. Um, and then from there, manage had my assets there, so that if I'm living in these more volatile emerging market, when their currencies go nuts, I can either take advantage of that or leave. Okay. Hi, I'm watching in Naples, Florida. Have you been in your plane lately? No. Actually, the last time I went to fly, there was a bird's nest in my plane. So this weekend, I'm cleaning that out completely, and I'm most likely flying Sunday. Uh, JM, at least 30% in a year. Uh, Yo, man, let me tell you, I understand what you're saying, but do you understand how outrageous 30% is a year, right? Like most financial firms in the country would be happy with sevens, with eights, with 10. 10 is like outstanding. So to think that on, and that's with billions of dollars being put to work. So if billions of dollars are getting put to work for 7%, and that's a hooray, we outperformed the S&P 500 in X year. 30% is a reach. Now, how would I do that with 10K? I would take 10K. I would get an apartment in a busy Airbnb market and hope that I'm making anywhere from $500 to $1,000 a month as my spread. That with that 10K, you should be able to pay your security deposit, be able to pay your first month's rent, be able to pay for a furnishing. You've made your investment. Maybe you have a few months of rent there, just operational cash. And if that asset, let's just say it's a studio in Manhattan, you got it for right now. The prices are low, which is why I got another one. You're talking about $1,700, $1,800 for a studio. You're renting that out for maybe $120 a day. Maybe you're making $3,000 a month in rentals, or $2,800 a month. Subtract a few fees here and there. Okay, you're up 600, $700. In the 1 year's time, you're going to do 72%, but it's going to be an active 72%. But you know, at least you did 72%. But other than that, I really don't see any other investment other than those sort of small business hustle type of that's going to require your hustle in addition to your capital. You're not gonna see, you know, 30% yield on 10K. Buy Cardona Ada. Wait, I don't even know what that is, Paris. Um, okay, JM. And also, what is the earliest that someone can retire? What do you mean? You can retire whenever you want as long as the money is hit. Or are you talking about like government retirement? Mr. Carl with a K. Do you recommend renting apartments in Thailand and then offering them as Airbnb to tourists after the pandemic? Thailand's market is thin. So the issue with Thailand is that I could go to Thailand and I could get a decent hotel for like $40 a night. I could go into like a simple bread and breakfast type of spot and get a hotel for like $25 a night. So the Thai market is cheap. A lot of tourists from India, a lot of tourists from South Asia, a lot of tourists from Australia looking to spend little money. So since the market isn't that, it's busy, there's action there, people want to go there, but the values aren't high, you're not going to make much. That's why I would rather go into a high cost market, because even if I'm making, you know, a $30 a day spread in New York City, more than that, but let's just say I'm making a $30 a day spread in New York City. You look at full 30-day occupancy, I made $900. There's no way that you're going to make a $30 spread on a cheaper apartment in Thailand. You might be making a $6 a day spread or something absurd like that with the same work, the same effort, same logic. So it's better to be in the more expensive, higher priced market, because the spreads on that, or the percentages on that, are going to just be better, right? So the more money you put to work, fortunately, um, the more you get, the more expensive the locality is. Sometimes the more you're able to earn. You know what I mean? If you're a real estate agent where they're selling a bunch of $100,000 houses versus a real estate agent where they're selling $15 million houses, you know, your 3% cut is a whole lot different, right? So that's my bit on that. What about Brazil? What about it? Westwood. Where are safe places to invest that are not affected by climate change? Climate change, bro. I guess on the mountainsides. I really don't know. Um, Safe place. I'm not even thinking about climate change when it comes to investing. But if you're concerned with climate change being a a factor that's going to affect your investments today, I don't know. Um, I think you're worried about the wrong things, man. Floods, fires. With, barring climate change, floods and fires can happen anywhere. What about Rio de Janeiro? What about Rio de Janeiro? I'm not sure what the question is, Westwood. Um, Mexico City, same thing. The cost of living is fairly low. I had an Airbnb in Medellin, and my initial idea was to do like a house for bachelor parties. My partner talked me out of it. Unfortunately, I let him do that, and we ended up doing like apartment rentals. Right? We were averaging $60 a day for a room. If I had rented that house out as a party house, I would have averaged $800 a day for the house. So, even if I just had the weekends booked every weekend, just 12 days a month at 800, we would have made $9,600 in gross rents. Those tourists would have been Americans, would have been guys who are totally comfortable spending the money. And we would have probably netted $5,000 or $6,000 a month on that operation with just one group of tenants a weekend. Instead, we were making way less than that and ended up losing the business due to pandemic. So I would try to focus on markets that you're gonna be able to mark up the cost and make a spread that's you know reasonable. Uh, Crypto. I bought at 30 cents. It's at $1.20 and counting now. Do some research. It has major events coming this year. Look, Paris. I personally don't mess with crypto. Um, I've missed the Bitcoin. People have been shouting Bitcoin at me forever. I've missed the Bitcoin bus. Um, I still don't get it, and I haven't quite tried to get it, honestly. But any asset that's priced at 30 cents or $1.20 is appropriately priced, right? If you, Paris, and I don't mean this to insult you, but if you, Paris, are investing in crypto at 30 cents and your research has concluded as you as the independent investor has concluded that there's major events to come, why aren't the institutions that are that have way more analysts and way more people doing research than just you pouring into the same asset class, right? Usually, the better the asset, the more investment activities there, the more demand, the higher the price, right? You look at Amazon stock, for instance, look at Bitcoin, right? Bitcoin is a pure supply and demand situation. So when you were looking at another cryptocurrency trading at around 30 cents, are you interested in it because of the Hail Mary success story of, oh, I bought in at 30%? You're up 400%. That's freaking incredible. If I had any investment where I was up 400%, I don't even I would be out, right? Just because I'd be like, this is just outrageous. It's not sustainable. I need to cash this out. If I end up walking away with, I missed out on another 1,600%, F it. I don't care. Most investors are looking to outperform 7% a year. So that's the outlier success story that may contribute to my 7%. But to me, just I couldn't recommend anybody do that. I mean, it's a Hail Mary, pure gamble. I mean, I'm not in it for that. What do you think about investing in a property? Right now, I have no idea about Turks and Caicos. I can't comment on that. What are the specifics of that deal? So Westwood Ray, what about Rio de Janeiro? I really would like to know what you mean by that. Brick Jones, what's up? Does investing in places like Fortaleza, Salvador for investment? Okay. Right now, I think if you're going to be investing in Brazil, now's a good time because I think the currency is so undervalued and the prices of real estate haven't moved to reflect that. And that the situation is so bad in Brazil because of political mismanagement of this COVID thing that people who are looking to cash out and say, man, I'm done with Brazil and I'm ready to move, or I need to, sell my second or third home in a vacation spot like Buzios just because my business has taken a hit this year because of closures due to COVID. Those two factors kind of make it interesting to buy assets there now. I think the Brazilian economy bounces back. It's 220 million people. They're a pretty self-sufficient country. I really like Brazil long term, but I wouldn't. My love for Brazil is personal. It's not so much like investment driven. So when you see me buying properties internationally, it's not because I'm like, oh man, this is a good investment for me. When I'm buying those properties internationally, those are personal projects that also I apply the same investor brain to, right? My mind is still thinking the same thing. Am I getting a good deal? Am I underpaying for this asset? When I'm done with this building, is it going to be worth less than what the market commands? And how much less is it going to be worth than the market commands? So that's kind of what my thinking is going into those projects. Not like, hey, I got this money that I'm trying to put to work because I'm trying to turn a profit here. If I'm going to put some money into work, I'm most likely going to put it to work in the US just because the credit facilities are better here. The economy is larger. When your economy is moving trillions of dollars a year, that's trillions moving, just exchanging hands. That's a busy marketplace. You just got to stick yourself in it with some duct tape, some double-sided tape on your body. And even as a bonehead, you're going to make money. Okay? So I'd rather be in a market like that where as a bonehead, I could catch some dollars and then take my dollars and spend them in an emerging market. And get even more value for those dollars that I captured here. That's my thinking. Yeah. So I hope that answered that. Check out this development in Zanzibar Island, Fumba Town. Okay, I'll check it out. Fumba Town. My boy was just in Zanzibar. Said nice things about it, nice beaches, but he said there were some infrastructure issues there. Okay, I'm only going to answer a few more questions. What? Oh, great videos. Thanks for talk. talking about healthcare, also all in on Coinbase IPO. Keep sharing your videos. Why are unskilled home assistant business not worth it? Uh, I wouldn't say it's not worth it. Unskilled, you're making smaller spreads, right? So let me give an example. So this is Safe Alusi or Safe, I'm not sure. So for your question, right? Let's look at an example in New York City. I could be getting $26 an hour from a managed long term care plan, right? Out of that $26, I have to pay about $22 to the home health aide between their wages, benefits, workers' comp, all in expense on that home health aide. Then I still have my operational overhead. After operational overhead, I have my profit. Ends up being like $1 and change, okay, per an hour of service. That's one example. Now you turn around, let's just say it was a private pay scenario where you don't have the same mandates and you were charging $30 an hour, but you were paying the aide 16 an hour, maybe your all-in cost ends up being 19. You're making $11 an hour spread. That's not my business because I'm not shaking down seniors for their money. I go after the government payers. But you would make a larger spread, and that would be okay because you might do 2,000 hours on that person, right? So you do 2,000 hours, $22,000 for the year on that particular client. So that could be lucrative, right? You have 100 clients like that, you're doing 2.2 million a year. So on the skilled side, and remember on the long-term unskilled side, those people are going to be with you maybe for 5 years, 10 years, 20 years. On the skilled side, you may have a patient comes out of the hospital, they have a PIC line in, and they need PIC line maintenance, and you're getting paid an average of $150 a visit on a nurse that you're paying $50 a visit, right? So you're making $100 a week on that nurse doing a visit, but that might only be for 6 weeks. Okay. If that's the case, all right, you made $600 on that case. So a lot of people get pulled into the skilled side because they see the spread as being big. Oh, I'm making, $100 per visit versus, $8 for the day on this non-skilled worker. For me, I like both. I like looking at the skilled side as a way of getting clients into the door, making money off of that episodic care, and having a percentage of those skilled clients convert into long-term clients. And then I'm looking at all the long-term clients that have this government plan that require services and slowly building them out. So on one side, it's a volume play, small margin. On the other side, it is larger margins, high turnover on clients, low turnover on clients here. But if you have both and you're building out both businesses or both lines, you'll do okay. Da, 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 da. I like Fort Lauderdale. It's sunny, it's vibrant, it's not too busy. I like it. I really like it here. It's my U.S. base. I'm living in Brazil, and that's true. Yep. Like the food, like for instance, what Douglas is saying, the food prices have adjusted first. Cost of oil, cost of imported foods, those things have changed right away. But most of the services and most other things have stayed kind of fixed to what people have known to spend. They haven't turned around and adjusted real estate prices 40% up because their value got their currency got devalued. Because people would say, hell no, I'm not. The economy is so bad. How am I going to spend 40% more on real estate? It just doesn't make sense. Okay. Cardona ADA is a legit company with many contracts and applications to come. Financial institutions are slow to crypto. PayPal, JP Morgan, etc. are buying now. Cardona is going to be currency in Africa. Look, do your thing. You know, I hope you make tons of money doing it. Honestly, I do. It's like I'm not gonna knock somebody's investment, especially if it works for them. It's just not something that's for me, Paris. I think, you know, like I said, the smart money puts money. They may be a little more conservative, but it's J.P. Morgan has been around for a long time, and they've been around for a long time by taking their conservative bets. Okay, over the long term, those conservative bets are what pays off. Maybe you hit one out the park because, hey, maybe you were an early adopter to Bitcoin as JP Morgan or as maybe BlackRock or any other financial firm said, you know what, I'm going to buy into this. But this investment's only going to represent 1% or 2% of our portfolio exposure. Maybe that's $100 billion. Or maybe it's $2 billion. And they were early adopters investing in Bitcoin infrastructure. That may now be $300 billion of their portfolio because of that early hit. But still, that's the grand slam walk off home run in the World Series, right? Those don't come along every year. Maybe that puts them into a new category because they took that chance. Or you're the firm that invested in early Facebook, early Amazon, early whatever, right? But you can't base your, and I'm not saying that you specifically are doing this, but you can't base your entire strategy on something that's 30 cents. To me, that low price really reflects how they perceive the value of that asset. That's just the way it is, right? It's 30 cents. Why would I want that? Have you heard about Porto de Galinhas Beach, Pernambuco, Brazil? Those names, the indigenous names make me laugh. It's in Recife. Epic Jones. Gotcha. Cool, man. Um, Not a problem. Thanks for tuning in, Paris. Like I said, sometimes I'm going to be critical of what people are saying just because I see it. It's the same thing that happens when investing in penny stocks. Whenever I see people start talking about asset classes that are that cheap, automatically it's like, oh no, this is not good because people see those penny stock success stories or like Apple was trading at X price before Steve Jobs came back, into Apple. Imagine if you bought then. Okay, that hindsight obviously is 2020. It's going to be like if you were investing in Apple at that time, you were a freaking idiot because Apple was about to blow up, right? If it wasn't for them bringing Steve Jobs back in and introducing the iPod that actually started to change the trajectory of Apple going forward. If it wasn't for that, Apple would probably be defunct. Apple would be BlackBerry, something, Nokia or some one of those guys. If it wasn't for that turnaround, Apple was on death's door. But you're gonna have people who are like, oh, if you had bought Apple in 1992 or 1994, you would have made 7 trillion% or whatever the case may be. And Apple wasn't a penny stock company. Then you have these penny stock companies that listed have never been worth more than pennies. I don't even know why they're maintaining an exchange, to be quite honest. And then you have people who are looking at those, as like, okay, if I buy enough of these, I buy $10,000 worth of this penny stock, and it goes from 30 cents to $1.20, which is substantial. I quadruple my money. What if it goes to $100? Oh my God, I'm wealthy. But it doesn't. The probability of that happening is very, 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 very low. That penny stock company gets their traction really makes a difference, turns around, becomes one of the major names on the indices. I you know I don't know. It's just unlikely. So when I see it, it always triggers me to be like, oh no, you're kind of making a mistake. You kind of are taking that step into the I'm making a wish on this investment, and then you start making justifications for your investment when the chart and the financials say it all. You're it says that you're wishing. So I see it happen all the time. So once I saw that, I needed to comment on it because I if I had to bet my money, if I had to either invest in you sound like a jerk, but if I had to invest in that stock or take the opposite bet that that situation is not going to work out, I would take that bet 100 times out of 100 times because I know that I'm going to end up correct. If this is the one anomaly that does it, wow, fantastic for you. You hit it, awesome. If it's not, then unfortunately you might have lost money in something that just shouldn't have even got your attention. I hope that explains my position and what I mean there. So at present, we're just about at 180 in New York, and then that was closer to 300 in 2019. We lost one of our contracts, um, and that put us in a bad space. And we're on the verge of selling the company at that time before I moved down to Florida. So my idea was we're going to just sell out and move on anyway. Um, and I was going to start up AidBook, as you know, uh, based on that. So that's where that company is. It's I would say the biggest issue there is uh, disunified management. My vision for the company is more robust, grow through acquisition, grow through heavy marketing spend. My other two partners have different objectives. They're kind of happy with it being a lifestyle business that pays the bills. And my new venture is more focused on that. So we now just we this month we're at 10 clients because I have another license in New York. So we have 10 clients in New York, seven in Florida. We just had our CHAPS accreditation, so things are going to start turning in Florida now that we can bill Medicare clients. So that's going to be exciting. And just right now we're looking uh, at trying to acquire an $80 million home healthcare company. So the strategy is completely different and completely different thinking. So the short answer: under 200 in New York, uh, and would much rather be playing a bigger game, and there's a lot more potential out there. But I'm 1/5 of the decision making power at the company. Although I'm chief executive, my position in the company is my position. I still have to talk to mom about things, which sucks. If my mom doesn't agree, who's the majority shareholder, and she's doing things that don't make sense to me, there's not much I could do about that. My hands are tied. So it's more important for me to kind of go out and do what I'm doing now. And I would imagine by the end of this year, the goal for the end of this year is to at least be on path to have $50 million of revenue under our control. And if this deal that we're looking at now pans out, then we'll far exceed that. But this is the game that we're playing. Douglas, just type on Google and see the resorts and flats. Nane resorts. Okay. I'm going to copy that and just Google that right now. Cool, cool, cool. All right. Any other questions before I bang out? Quentin, what did you guys decide to do regarding software? What's your thoughts there? It's not a stock. It's a cryptocurrency, and it's totally different. Every Okay, so what gives a cryptocurrency its value? Right? What gives anything its value is pretty much the demand for it, right? Stock, crypto, like I said, pork bellies, whatever. It's humans who give it the value that it has based on supply and demand for that thing. I think cryptos are here to stay, right? Like I had my doubts about Bitcoin, and I was wrong there. Um, and it seems that Bitcoin is very much here to stay. Uh, I just don't know where crypto goes, and I don't know if just because it's a cryptocurrency makes it a legitimate thing, right? Like you're investing in currency, right? You could invest in, you know, fiat currencies. You could invest in, I guess, gold commodity. You can invest in whatever you want. Um, I just don't know if all. I don't know if the hype of crypto is rooted in the success of Bitcoin and some of the other crypto success, but I definitely feel it's that way. And this happened. Listen, this happens before this crypto craze. It was real estate. Before the real estate craze, it was tech companies. Okay, 2001, 2002, 2000, 2001, 2002, the tech bubble was collapse was bad. After that, real estate ran wild. 2007 started to turn. 2008, 2009 crash. Crypto is behaving bubblish, and the thing is, when those things are happening, right? When everybody's making getting rich off these tech companies, and they're just blindly making investments, even people who don't know that investment class have made money. Other people start getting into it. That's just a bubble getting ready to burst. So I don't know what happens with crypto, but it's following the trend of so many other things that, like I said, if I was going to bet on anything, it would be on some sort of crypto collapse, and you have people who don't invest in anything, have never invested in anything in their life, have never owned a stock, have never owned a piece of real estate, have never started a business, nothing. But they got to get some crypto, right? They're not investing in the leader, and I'm not saying this is you. I'm just talking in general about cryptocurrencies. They're not investing in the leader, which is Bitcoin. They're investing in these obscure ones, right? That they're hoping for the repeat of Bitcoin. But they've never invested in anything else, and this is their first investment, obscure cryptocurrency. If your research is bona fide and it's sensible, and you're really putting your money behind the idea, make sure you're ready for the loss, because ultimately that's what it all boils down to. You do your research to really understand your risk. You put your money to work for what you believe to be the upside. Is always going to be the belief. And I could believe in the U.S. real estate market, my home healthcare company, you name it, whatever I believe in it, right? But if I'm wrong, have I properly vetted that deal to know what is my probability of being wrong? And if I am wrong, am I wiped out financially? right? That's all I'm. That's the basis of my decision making. What information do I have right in front of me? Do I like what I see? And if I'm wrong, what happens to me? If I'm right, what happens to me? And I'm just controlling that risk factor. I just spoke to my mom about following up today. Cool. We can definitely see the value in the software, especially at the price. Yeah, especially at the price. You're right about that. Bitcoin was 4K a year ago. Diversify. Don't put all your eggs in one basket. Indeed. Um, Luis will get an email from us today. I got to sign off. All right, Quinn. Thanks. Um, have a good night or good afternoon. Yeah, it's over on the West Coast. All right, guys. Yeah, Bitcoin was 4K a year ago, right? And a year ago, maybe even 2 years ago, I have an investment club, Mustang Ventures, for my fraternity, and this is my last bit before I go. And one of my partners in my real estate company, everybody was talking about Bitcoin at this. We should be investing in Bitcoin. And my partner Manuel was saying, yeah, you know, um, we we should, right, but we're not going to expose too much, just a small portion. And I was like, man, the way you guys are talking about Bitcoin makes me want to go and short it, right? Let me see a chart of Bitcoin because I can tell you. Bitcoin 5 year. Ah, yes. It was in 2018, okay, when Bitcoin hit 20 grand. So it in from 2017 to from July 2017 to December 2017, Bitcoin ran to 19,650, or from 3,000 from 2,000 to 19,000. So 1,000% in a year's time. I thought that was absurd. And the way that these guys who really like they were in the investment group knew that my fraternity brothers, I love them. The way they were talking about Bitcoin, I was like, this frenzy this is not going to end well. And I was like, I don't know much about Bitcoin, never really trusted it. I was like, but the way these guys are talking, I should pull up a chart and start looking for opportunities to short it. Lo and behold, there was that Bitcoin crash of 2018, reaching a low of like 3,000 in December of 2018. Okay. Now, since then, it's been ripping and running, kind of dancing around. What is this? 11,000 to about 11,000, made new highs, and it's just going crazy. But this chart looks absolutely nuts. It looks like a collapse in Bitcoin should be coming fairly soon, and it's not gonna be pretty. And I could be wrong, but the way I'm looking at it, I'm just looking at this simple Bitcoin chart. It just it seems pretty scary, just from how far it's run in this time period. And all it is the hot potato game, right? People pouring money in, pouring money in, pouring money in, and that's what's driving the value. Some policy change could hurt that. A raid on Bitcoin, somebody, folks exiting, a big player exiting, all kinds of things could happen there. But the moral of the story is Emmanuel was like, I'm going to put in a small amount in Bitcoin. And he did. And he's up substantially in his Bitcoin holding. Now, I think he put like 5% of his money into Bitcoin. That's cool. If you want to take that chance, fine, you do it with a small portion of your portfolio, 5-10%. It's not it could move the needle substantially overall. That could be the one that hits it out the park for you. everything else performs at 5%, that performed at 400%, your overall performance ends up being, 70% for a period. Wow, what happened? Oh, this Bitcoin really did it for me. But that's not going to be the norm. Okay, so the lesson is, or the point is, you can't look at that shiny new thing or that sensationalized market, because it always happens. There's always going to be bubbles. There was a tulip bubble. Think about that. For the bulbs of tulips, there was a bubble for that. The bubbles will always happen. Okay, so you just want to make sure that how you're allocating your money is ultimately in a way that's protecting you from absolute disaster. All right. So don't get like starry-eyed over cryptos and start over committing to cryptos because of the success of Bitcoin. Because had you been in since 4,000 and you put 20,000 to work, you would have a substantial boost. You get what I'm saying? You'd be up over $2 million. So that's nothing to sneeze at. So the thing is, you just don't want if you made that investment of $20,000 of Bitcoin, would that no that's inaccurate. I'm sorry, it wouldn't be 2 million. You made $20,000 of Bitcoin investment at 4,000. It's now 10 times higher. You're going to be up at 200,000. If that was your only 20,000 and you hit it that hard, I'm happy for you. But if you keep on that, one of your investments is going to get ripped to damn near zero, and it's going to hurt when that happens. So, be wise about how you kind of make your investments. Always be prepared for whatever that worst case scenario is, and live that. Just to close out, all of you guys who are here, make sure you like this, share this with anybody who could gain value out of it. I'm glad we had the discussion. When you're planning your retirement, please start with what I told you. Start with a spreadsheet, quantify how much you're going to need for the given city, and start designing your investment strategy and your business plan to make that number passively, to make your dream a reality. Thanks again for joining me here at ENTP Life. Take care. Good night.